Good afternoon, everybody. I've been having fun today, scalping the various indices in the world. And I've got some trades to show you coming up when we go to the charts. And the idea of these, to show you these trades, is not to show you that I'm making money. For me, thankfully, that's a given. Otherwise I wouldn't be doing this. I wouldn't be sitting around doing videos for YouTube if I didn't think that I knew what I was doing. And so what I want to do from these videos and showing you my trades is that I want you to get it in your brain and in your mind exactly what it is that I'm trying to do, what I'm seeing. And you're not getting the full signals on this because these are golden rules and they belong in Ant's gold trade system, but you're getting a flavour of what I look at. People ask me, why do you show historical charts? Well, the thing is that I spent 12,000 hours or something looking through 12,000 hours worth of charts, hundreds of thousands probably of charts, so that I could see the consistency in price action, the signals that were required to take good reward to risk trades and to produce what I call the gold system, the Ant's gold trading system. I produced them through looking at historical charts and noticing that there were similarities on these charts. And if you can get into your brain, as I did, by just training it again and again, looking at these things and thinking, this happens again and again and again, I'm going to take advantage of this somehow. But first of all, I need to work out exactly what it is at this point in time, or these points in time, that make them repeatable. How do people see them? And that's what I learned, and that's what I teach people. And so I'm going to show you some of those signals today. And we're going to look at the DAX first of all. The indices are particularly good for trading short-term timeframes just at the moment, because things are happening in the run-up to Christmas and the world economies are revving and unfortunately not in the right direction. But if you're scalping, you really don't care too much about which way you scalp, long or short. You do care if you've got funds invested for your retirement, but you're not trading with funds for your retirement, are you? You're trading 1 minute, 2 minutes, 3 minutes, 5 minutes, 10 minutes maybe, and maybe 30 minutes on those charts. We are limiting ourselves to scalping on those type of charts, but you can scalp any chart that you want. I love the indices because they are consistent with their signals and their price action. There's a lot of people who trade these charts and these instruments, and that makes them consistent. They repeat the same signals again and again, and you're going to see some in just a second. So let's have a look at the charts. So here's today's first chart, and this is the DAX, the 1 minute chart on the DAX. You can see that the price difference between the two numbers here is 10 points, which is actually better than normal on the DAX, because this is the middle of the day and it's the quietest time for trading a European market that is the DAX. It's the top German companies, and so there's a lot going on it, but normally in the middle of the day it's very quiet. However, markets are busy as I say, and so this was worth a go. Now, you've got on here the river of value, as you know, and I'm looking to take trades either long or short from the river of value. And as you can see, mostly the price is spending time below the river of value, and I'm looking for breakdowns like this one here. In fact, the candlestick wick here was a bit long, but other than that, it was perfect for a short. It was a good trade anyway, a good scalp entering when the candlestick has just gone red, but there's quite a way between your entry and your stop, which would go up here. The stops are unquestionable. I never let price go past the stop. I always keep my eyes on the screen when I'm in a trade. And you can see I've entered a trade short here as well, because it's price closed up here, and I entered actually just short on this candlestick here, and surprisingly to me, it didn't go down from here. Price was in perfect position, but it didn't go down, and I thought, well, when this opened and produced a little wick, I had a choice. Did I exit or did I leave the trade on? And because this finished in a very similar position and just as good a position, and this happens sometimes, you don't get the money straight away. I had to wait another minute. But I entered just below the 8 EMA, which was in perfect position when the candle opened, the next one, and then went red. It only had one direction it was going to finish in. And actually, it was only after the trade, which finished down here somewhere, it was only after the trade that I noticed that the 5-minute chart was in equally as good position. And I hadn't spotted that because literally I just got to the chart at the beginning of this candlestick here, and when I saw where it finished, I just got things ready and took my trade, took my opportunity. So this is what I'm looking for. I'm looking for breakdowns or rockets up from the river of value, and price doesn't, as I said on previous videos, it doesn't like being in this area. I mean, obviously price hasn't got a mind, but the traders who trade will not let it stay in there for long, because they know that some of the best trades are the ones that leave the area of value. These are short-term trades, they're scalps, and so 1-2 minutes is normally what it takes. This time it was 2 minutes. This is the DAX again, and it's looking to me as though it's in good position. So this is now further on. This was the US Open at 2:30 UK time, 3:30 PM European time, and the US Open produced a big green candlestick. Price did what can be the way that it opens when it's going to go down all day. It put in a little spike at the beginning and then started going down, but here we've had a good sized green candlestick followed by a little wick, and I'm thinking this is closed below the 8 EMA. It's in great position. Price was going down, and I can expect after these two candlesticks, I can expect follow through. So the price is in a really good position to be shoved down and come out of the river of value as it is here. And this is what happened. So got my entry just as price went red. I needed to see the red, and then I entered, and here it is. And you can see now that there are 20 points, whereas there were 10 points on the earlier chart. There are 20 points between each of these price values here on the index. So it's better volatility and volume at this time, and this is 2:56 p.m. So all's good with this one. You know, that's roughly where I wanted to take my profits at these values down here, and approaching the 23,200 value in the indices. So all's good, and it's logical to take profits at this stage. But it was these two candlesticks here that maintained the initial momentum that we got. Price closed just on actually the ATMA, put in a little wick, and then it's short. So you can see the wick was forming here, and I entered here. And it's through looking at these type of situations again and again and again that I learnt what it takes to be consistently profitable in trading. There's the trade. And then the US markets, well, when the DAX goes a bit quieter, I'll move into the US markets, and here we go. This is the Dow index, and prices started going down here now, and then it crept back up. This is a pullback, and the pullback looked as though it was about to reverse, so I waited for my wick after being near the 8 EMA here in the river of value, and I went short here, and I got in here. So it was way below where I wanted, but it's all right. We're in profit. And all that did was it increased my risk. So I'm at 1-to-1 here, risk to reward, and I would like more than that, but sometimes you do get slippage, and it gets you in at a price that you'd rather not be in at. Anyway, I wasn't crying over it because we made some money. And you'll be noticing by now, out of all my videos, you know, I'm demonstrating what I'm doing, and these situations in the market do appear on a regular basis. You know, the price going up here, this great big green opening candlestick had follow through here and here, and it was off the 20 EMA here and the 20 EMA here that you got the rocket upwards, and then it turned with a doji candlestick, big red candlestick, back to value. Actually, that switched value over to going down, which is where price had been going pre-market. And everybody jumped on it. And they jumped on it so quickly that my broker couldn't get me in at a price that I wanted. But anyway, no spilt milk. Right, I'm hoping that you're getting this. I do really hope that you're getting some good value from it. All the best with your trading. I'm hoping that you're making good use of the good volatility in the markets right now. And if you want any help, as always, with your trading, let me know. So my name's Anthony Beardsall. Do subscribe if you want more videos like this, and let me know if you've got any questions. Cheers for now. Bye.